the very purpose of these sessions, what we conduct here at Century, first of all, to aware the people what's going on with the markets. We give a small snapshot of what's been going on with the markets currently, and then what is the expectation. So today, more than looking at the outlook, we need to understand what's going on now and which are the areas which you can look into, because markets are falling. That's the fact. So whatever is the outlook, most important part is what we should do now. Let's try to focus on what we should do now, because there are some, we are going to talk about the future themes which you should definitely look at 2022. And we are going to talk about a few stocks which you should look at 2022. But a lot of these asset classes are currently range bound, and a lot of this news. So tomorrow there is going to be the FOMC meeting where the central bank is going to talk about, the central bank of US is going to talk about is expected of the quantitative easing. Mostly they are tapering it off, they are cutting it down, and also talking about the rate hike, the most popular topic at this moment, the rate hike which is going to happen in the market. So the entire market scenario is built around it. To predict 2022, it would be just one of those predictions, but we have to be very careful day on day looking at the news, and at the same time ensuring that your money is allocated into different classes so you are very diversified, right? Now we definitely do one-on-one sessions as well. So in case if you miss this session, this will be on YouTube. If you miss this session, you can have a one-on-one session with me, and we can discuss further about the platforms. We'll also be going through the live platform. All right. And that live platform will allow you to see the prices, the charts, technical patterns, and everything. Now, to begin with, I think my voice is breaking in between. It's probably because of the network, uh, but do not worry about it. It will catch up. Just try to be patient. And if you miss anything, do not worry about it. It will be recorded on YouTube, and later on we can have the session as well, right? So let's try to first understand what's been going on in the markets. That's one question everybody would like to ask. By the way, if you have any questions, please use the chat option to write, and we'll try to make it as much interactive as we can. So just to understand what's going on with global markets, if we see the US stock futures, they're still in the red. There was a spectacular recovery in the last trading sessions, but then even after that, we it was more like a dead cat bounce where markets just fall too much, and then there is a slight bit of recovery, and then it fall again. So the US stock is still in red. Uh, S&P 500, technically it is showing signals of moving up, but then again, there is a possibility there might be a smaller recovery in the next few trading sessions, and then again the rate hike and the FOMC will identify the real trend of it. Now we have to also see what has been going on with Nasdaq. Now Nasdaq has fallen down a lot. The technology stocks uh, ahead of the rate hike have seen a major fall. So and the way it has fallen down, if you see the technicals also taking the 100-day, 200-day moving averages, these are the kind of moves normally in a downward market. And the ideal way, this is the most asked question, the ideal way to trade such a market for a bull who is already on the buying side will be to take positions after the key supports are recovered. So for example, if you look at S&P 500, okay, and again guys, whatever I'm going to talk about today, it's based on the current market trends. Please do not take it as an investment advice unless you consult from your risk expert and risk managers. Each one of you have different risk appetite. So I'm just talking about like the ideal way to trade in a market. If you are a bull, basically if you are a buyer, the ideal way for S&P 500, for example, there's a very good support at 43.18, right? So the idea is that if the supports are recovered, then you enter into that position. Now, that being said, look at gold for now, and we are looking at gold currently. Still, now gold has reached to 1851. There was a trading range of gold going on between 1830 to 1845. on Tuesday. But stock markets have become so volatile, and then there are tensions in Ukraine, which have kind of prompted investors to expand their exposure to this safe haven, right? And when we look at from gold's point of view, whenever there is an uncertainty, people look for a safe haven, and that becomes gold. So yeah, I mean, it has crossed 1850, it has reached to 1851. Today there is a pre-Fed anxiety also, which is popping in into the gold buyers because it's the year of rate hike. Means gold was not certainly expected to go high, but because of the stock market volatility, the Ukraine tension, we have seen gold prices kind of moving ahead. And if we see for tomorrow's FOMC meeting, investors will look out for hints whether the central bank thinks that is it necessary to speed the process of withdrawing the stimulus. So for all of you who don't know what a stimulus is, anyways, this looks like a very well informed crowd. But then the stock markets during the pandemic were tanking, and the GDP was getting affected because of the lockdown. And since the beginning of the pandemic, all the central banks decided to add and inject a lot of cash into the economy. Now, if we see, so moving on with the presentation, before until 8th of November, the central banks were pretty much in a desynchronized mood. For example, US was more aggressive, less accommodative. They were talking about rate hikes, they were talking about central banks. And then there were Australia and Russia, which were very stable, accommodative. But China, on the other hand, was very, very accommodative, keeping interest rates low, injecting stimulus, right? So the central banks were very much in the desynchronized mood. After November, Fed central bank confirmed in US that inflation is not temporary; it looks permanent. So they have to increase the interest rates, and that's how the US monetary policy became a more tightened. I would suggest you. I have this notepad with me. Whenever I sit, I always keep my notepad with me. I would suggest if you want, you can keep your notepad with you just in case if you find something interesting, you can write it down, and something can be really beneficial. So now central banks across they have become kind of uh, less accommodative, if I must say. And this is the move which is going on right now, talking about rate hikes, talking about reducing the stimulus. So, especially tomorrow, investors will be taking some hint from central bank. They'll be looking for any hints if central bank says there's no hurry to withdraw the stimulus, or it will be withdrawn at a faster pace, at a lower pace, and that is going to affect the markets as well. And that was going against gold price because now most of the central banks are tightened up in terms of monetary policy. So that being said, it makes the currency more stronger, puts dollar in weaker face, put face. That is the reason it was more than surprising when gold is up. And if we see, I think even now also when we reach the gold and commodities outlook, I would still say gold is pretty much range bound. So at this moment, we should always see it as range bound with a bearish tilt. When I say bearish tilt, that means slightly on the downside. I still feel it should be inclined on the downside of the because the interest rate this year, because of globally how the central banks have maintained their mood. Looks like that gold still has inclination on the downside. So it is still very range bound. We are not expecting a really sudden fall or a sudden rise. What is going on right now is a result of the Ukraine tensions, is a result of the stock market's volatility, and that is what it is. So this was basically the commodity outlook. Just to have a see, uh, gained 23%, uh, 3%. Coffee prices went up by 4%. Oil went up by 40%. Copper went up by 21%. Gold was the precious metal which went down by 5%. And really from the outlook point of view, as I said, uh, I would still be thinking that from the point of view of the graph is not coming here, but from if we compare 2020, 2021 and look at the current performance of gold, I would still keep it range bound given what's going to happen with FOMC, but a bearish tilt towards a downside tilt. Now followed by crude oil. Now, so let's try to understand the charts as well. So I am logged into the live platform right now, and we'll look at the oil prices also, and we'll see. Let me just log into the live platform so you can see the live prices while we speak. So you can also have demo accounts. You can talk to your relationship managers and they can give you demo accounts which you can use later on to just execute any practice trades if you want to. And the best way to understand the market is, just be involved into it, practice more, just trade more. And when I say trade more, just do it in your practice accounts, so you are aware about what's going on. Okay, so I'm going to share my screen with you before I move on to oil. Right. So can everybody see the numbers clearly? Do you want me to zoom in? Use your chat options to tell me if you can see it clearly, if you can read what it says. So I just want to make sure that everybody gets the perfect view of this. Can everybody see this? Please send me a yes, okay, if you see this properly, if you can hear what I'm saying, if you can see the platform. Perfect. Okay. Okay. Great. I keep asking you to interact with him because it's a webinar, so I don't want to. Finance itself is very boring, so I don't want you to just get bored. Okay, great. So now I'm going to go and open oil chart for you. So let me show you the gold chart first. You just go to commodities, select precious metals, and that easy going towards gold, and then open the chart. Right, this is a gold chart right now. The current price of gold is $1,842 per ounce. And before I was sitting in the session, it was 1851. Be surprised how fast it falls, right? So basically, if we see the gold prices right now and just see in the last 2 years, there is support and resistance. So as I say that it's still a very range bound thing, and let's say a decent buying level over here. Let me increase the size of the font at least right here. Make it very large font so everybody can see this. So on the right side, on the vertical, there's price. On the left side is the duration. So if you see, there is strong support at 1745, but I'm looking at a yearly chart, right? So not expecting 1745 just like that. And then again, resistance formed around 1831. But if I lower the duration, let's say in last day on day basis, probably 1 hour or so. Yeah. So now if you see smaller supports and resistances, right? Let's just try to make these channels right here. So if you see one range, right? Then if you see let's say here, so let's say here this, and then somewhere around this 1829. So basically 1812 to 1830, then 1830 to 1850, right? So still keeping it range bound, but still on a bearish tilt is what we are looking at. So Gold is mostly going to be more like a technical game, but please look at what central bank talks tomorrow. It's most important, so that you should see this. Now, following towards crude oil, let's check Brent prices. Now, oil prices $87 per barrel. In last 5 months or 6 months, if you see, oil has continued to rally, and especially for now, we are looking at oil prices at least in the first quarter are likely to stay bullish. First of all, inflation is going higher. The reason why central bank is increasing rates, and if you see, oil demand for oil is rising at a faster pace. Supply is not increasing at the pace at which it should, because there are a lot of disruptions caused in Iraq, Libya, Nigeria, like this. So basically, the overall target for oil prices is still above 90. But then, as we say, this is for the first quarter I'm talking about. Um, if we closely look at the Omicron variant, also, it's not affecting the way people expected. Fortunately, it's not affecting the way people expected it would. So the Omicron variant is also weak. So we are not probably looking at another lockdown, and that is the reason that why, with a reopened economy, with higher demand and supply disruptions, oil prices have continued to go higher. So at least for the first quarter, we might see oil prices on the bullish part itself. So if you see the oil prices also, they have started continue to trend in. Okay, now we should definitely look into some stocks and what is the outlook for the equities, because currently the tech stocks are falling, and to engage into technology just now, it might be probably riskier. Now, after discussing a lot and looking at different aspects, what we should consider is a probably a sectoral shift or a sectoral rotation in the middle of this volatility. Please, let's not take this lightly. Stock markets are really volatile at this moment, and to reduce the volatility, or I should rather say, to protect yourself against the volatility, as I said, those who are day traders, who are normally on the buying side, please enter only when you see the supports have recovered. And when I say supports, that means those buying levels from where the prices bounce back. Next, a sectoral rotation is needed. Whenever there is a rate hike, normally, we have seen back in the past that instead people ditch the investors, they ditch technology stocks, and they move towards value stocks. Okay, value stocks are these companies which gives you a proper dividend. They are less volatile, and I want to say recession proof, but the right way to say it is those assets which are kind of non-cyclical in nature, right? Which continue to act in the same way. So there is a stock pick, a lot of stocks. So in this pick, there are some technology companies as well, but there are some financial companies as well, and which will be the theme also for this. So I want you to see the theme right here. Of course, these are some futuristic themes we're going to talk about: digital payment, DNA sequencing, and etc. But let's understand the investment themes for 2022. So there is definitely financial, there is definitely energy, there is mid cap, and then there are reopening winners. So the portfolio we are going to discuss right now have few reopeners. They have financial stocks as well, some technical as well, and the portfolio which we are going to share now. And you can get a copy of this portfolio from your relationship manager anytime. These are some topics of 2022. Just want to make sure everybody can see this. Great. Okay. So Again, the portfolio which you'll be seeing now, the it is prepared depending on the current market scenario. A lot of these stocks which you will see, so because this portfolio was prepared on, sorry, in the beginning of the year, right, somewhere around beginning of the January. But after that, markets have fallen down. So you will even see a lot of these companies at a lower prices than what it is actually written, right, from the current market price. So if you see this particular portfolio, the current market price is closing at a price of 10th Jan, right? So this was prepared on 10th of January, but these are the picks for 2022, guys. So that's why we haven't changed any dates. This is what it was prepared. There are some stocks which have, because markets have come down, so you will see a lot of these stocks at a lower prices than what it is mentioned. But at the end of the day, these are the picks for 2022, and it comprises of financials, it comprises of technicals, it comprises of reopening stocks like Boeing and Walt Disney as well, right? So just to begin with, we are looking at Amazon, for example. Amazon's yearly 52-week low was 2,800 and 52-week high was 3,700, right? Obviously, the market cap is more than $1 trillion. If we see Amazon, one of the most consistently performing stocks in the market, not just this year, but probably last few decades, expected to grow, whether it is cloud computing, digital advertising, e-commerce market. So cloud computing, I did a session earlier today on cloud computing, and Amazon Web Services is one of those areas of Amazon which is bringing at least 15% of the total revenue. So in the space of cloud computing also, Amazon is expected to grow. In 2020, Amazon generated $386 billion in net revenue, right? And this has continued in the first 2 quarters of 2021. Earning per share for the first 2 quarters of 2021 beat the analyst expectations by 65%. Third quarter was not that good. The company missed. But then, as we see, if you see the competitors of Amazon, Amazon has outperformed all of them. So, most important part, again, as I focused on the cloud computing, Amazon Web Services, the AWS arm, is the most stronger part of Amazon at this moment. Amazon Web Services dominating the database of the cloud computing, and this is really, really important. Netflix, McDonald's, BMW, Facebook, these are the among the world's most prominent and most influential companies. And these companies are using Amazon Web Services. This is phenomenal, right? If you look at Netflix and McDonald's and BMW, all these companies are using Amazon's platform. So basically, if you look at from the revenue point of view, also, it has started going up. The cloud computing segment, the revenue has also started going higher. And as I say, that Amazon has generated 15% of its total revenue from Amazon Web Services in 2021, and that continues to happen, still holding its ground, right? So while the company has started to deliver more attractive profit trends over the past couple of years, Amazon continues to invest back into the business aggressively. So this is one reason that why we are looking at Amazon, not just for now, but for 2022. Please write your queries or chats if you have over anything. We'll continue to discuss about these stocks. You can write it down on a piece of paper, but as I said, I request you, please talk to your risk managers and risk consultants before investing into any of them. This is just a market information on the basis of what we see, how we see the markets currently. Um, it's not necessary that these picks are going to be 100% right. As I said, between 10th January and now, markets have changed and prices have come down. But as I say, that we still continue to discuss these stocks because over here, these are the picks for 2022. So there is a question here. Kindly advise what should be the strategy for long-term investor. See, good question from a long-term investor point of view. If you can throw some light on when you say long term, what you mean about long term? Because now long term has a very different meaning. I see a lot of investors which say that I want to go long term. I ask them, okay, how long? They're like, probably a year. So you need to understand that if we are looking at the another 4 or 5 years or 6 years, then yeah, probably the companies like Amazon's are really good because in the last 5 years, Amazon grew a lot. Before 5 years before that, Amazon grew a lot. So these kind of companies, if you're looking from a futuristic point of view, then tech will always have the space, all right? And it will always be a mixture of the portfolio, not necessary that every company you buy is a technology company. If you keep a dividend stock for 5 years, it doesn't move that much, but it continues to give you a fixed dividend, which is a kind of income, right? In a high interest rate environment, probably that is going to be one of the best idea. Now, when I say long term investor, doesn't mean that if you have taken a trade and it has gone really wrong, you go long term on it. You have to assess your risk. This is one problem. Every short term investor, when does a wrong trade, it becomes a long term investor because doesn't closes the loss. So we have to understand where we stand. There are a lot of such companies. So, for example, if I talk about Amazon, if I talk about Snowflake, if I talk about Datadog, there are a lot of companies which have a future growth potential. And from a long term point of view, you should be definitely looking into it, right? Uh, so this is again, you have to define long term for yourself, and then definitely you can make a strategy. We can make a strategy over it. Second is we talk about Salesforce.com. Salesforce with a ticker CRM, very important company from a software as a service point of view. Leader in cloud-based uh, customer relationship solutions. And when we talk about Salesforce, I'm not sure how many of you heard about Slack. Slack Technologies was this in-house. It was an app, again, a customer relationship management app. Slack was about it was a team management app basically. If you download this in your app, you can communicate with your teammate over a project, and there can be separate rooms and separate teams can be created. Um, Remote lifestyle in 2020, it kind of induced this um, style of working, and the remote lifestyle or the work from home lifestyle, it boosted the use of companies like Slack Technologies. Salesforce acquired Slack, and it has become one of the most important players in the workforce communication. You talk about work from home, uh, Salesforce, Slack, they provide these kind of services, right? Again, when we talk about Salesforce as a company, it has generated great revenue in the third quarter in 2021. It's an increase of 27%. Salesforce is expected to generate more revenue in 2022, which will be again 20-25% higher. So this is again, guys, look at the stock from a very futuristic point of view, but at the same time, you have to take it with a pinch of salt. Understand that it is still a growth story. uh, when the time will come, stock will fall. It is not something, it's not recession proof, but it is kind of vulnerable to cyclical downturns as compared to the other tech companies. Let's try to understand when tech companies starts falling, these are different companies, but then something like which is related to customer relationship management, right? Or a company which is providing you a digital transformation solution, Salesforce is the company you want to look at. So keep a check on this company, guys. Keep reading more about it. Talk to your risk managers about this as well. Third is Nvidia. Nvidia, uh, again, industry semiconductors. If you see the 52-week low of Nvidia, it's $115. 52-week high is 346. That tells you how volatile it is. Currently, Nvidia, let's see where Nvidia is right now using a live platform over here. So let's look at Nvidia, for example. Right. So it saw high of 356, 344, right here, 346. It came down right here before it bounces back. It went down to 206 and then again bounced back to 226. Now, important part about Nvidia was right single moving average 50 days and let's say 100 days. And then 200 days as well. Right. So if you look at the stock, it already broke its 100-day moving average when it was at 260, 270. A 100-day moving average means, so when I say moving average price, it's the average closing price of a stock. And when I say 100-day moving average price, which means in last 100 days, what has been the average closing of this stock? So definitely when a stock falls below its 100-day average price, which means a new trend is opening. And in this case, it was a downtrend. So from 260, it went down to 227, 219, and we see now it has reached to its 200-day moving average. And if it breaks this 200-day moving average, which looking at the technicals and from looking from a broader perspective, what tech is going through, if it does, then it might come down further to the levels of 140 and 150, which is very close to its low. So my point about NVIDIA is, again, look at from a very futuristic point of view. It is an industry leader in graphic cards. 80% of the cloud and data center in the graphics market in 2020 was held by NVIDIA. And this puts NVIDIA in a very, very strong position to increase not only the sales but earnings in the future, right? Um, if you think about the future is all about probably self-driving cars or metaverse or cloud gaming or cryptos, anything. The graphic processing units are needed and the chips are provided by NVIDIA, right? The AI processors, if you talk about, which are used in supercomputers for medicine development, for data centers, for self-driving cars, all this is provided by NVIDIA, right? Even for the Amazon Web Services, NVIDIA provides the data center CPU to Amazon Web Services also. And that same web services platform is used by Netflix and Facebook and other companies, right? So that being said, NVIDIA has made a lot of investment in metaverse applications, right? And that is also one thing which we need to see. It's very unique at this moment. It has the hardware and the software to support the developers which are needed to make advancements in AI, robotics, metaverse, and in a lot of other projects, right? So we are looking at NVIDIA from a very futuristic perspective. Look at the stock, read a little more about it. Look at the current price right now, it's 225, already fell down from 262, and the highest was 346. Moving back to the portfolio here. Next is Airbnb. Now, Airbnb, we all have heard a lot about them. This is a part of the reopening area, right? I was showing you the themes, which themes you should look for. You should for the reopening stocks, for the financials, for the futuristic. So Airbnb is one of the stocks from the reopening part. 52-week low 129, 52-week high is 219. So again, major volatility. Uh, Post-COVID recovery, Airbnb has been very strong. Uh, so if you see from yeah revenue point of view, this is what you need to read over here. The company's revenue increased from $900 million in 2015 to $4.8 billion in 2019, right? This is really important. So from in last 4 years, from $900 million to $4 billion, the revenue has increased. And at the same time, Airbnb has demonstrated its ability to respond to these pandemic kind events, right? After pandemic happened, Airbnb still sustained. It still took a very big share out of the tourism market. So if you see now also, the bookings are increasing. Uh, from the 2020 point of view, 2021 point of view, in 2022, it is expected to go higher. If you see the growth in the bookings, Airbnb has delivered its second quarter of double-digit booking growths. They are projecting a good acceleration in the fourth quarter as compared to 2020 and 2019. So this is something which is really important, guys. It's a reopening stock, recovery stock. So you have to be very careful with this also. But then you can always keep a check on how it performs. Out of the analysts, 20 have suggested a buy, 16 have suggested a hold. while 3 of the Bloomberg analysts have suggested a sell. Okay, there is a question here. Is it good to buy a fundamentally strong stock at 200 single moving average or near 52 week if we want to hold the stock for 2 to 3 months positional trade? See, if you're talking about 2 to 3 months, buying a stock near 200 SMA, it's not a bad deal. Okay, if it's near its 52 week, but then you are mostly looking towards the recovery. Okay, plus look at the reason why it has fallen down. So why I would still look into Nvidia, because it is falling down due to because the tech is down, not because anything is wrong with the company. So yeah, probably 200 moving average is a decent price to enter. But as I always say that buy the stock if you feel fundamentally strong. You do this with a pinch of salt that if it goes down any further, you should have the holding capacity and the vision to hold on to it, right? Because it's a high interest rate environment and a lot of investors are ditching techs to go towards value. The reason why we keep Nvidia over there is that if you believe in NFTs, if you believe in metaverse, if you believe in Web 3.0, if you believe in all these other projects, AI growth, artificial intelligence growth, Nvidia is your company. They have already positioned themselves as leaders over there, and that is the reason that why this should be in your portfolio. That being said, yeah, it would not be a bad idea to enter with a 200-day moving average low. Still, calculate your risk first and only then enter. Right? So from after ANBNB, we look at Coinbase. Again, if you see, Coinbase 52-week low was 420, 208, 52-week high is 429. Coinbase is, let's understand this. Coinbase is one of those companies. Actually, Coinbase is the company which is a crypto exchange and the only crypto exchange which is listed in the US market. And it has a lot of users already. Coinbase has talked about providing a NFT market also, which brought Coinbase back to the notice. So if you look at the NFT based platform, so imagine Coinbase already has a lot of users, right? Providing a NFT market by Coinbase, it is only going to increase users at a very exponential rate. Active wallets increased by more than 100% from 204,000 to around 400,000 in Q3. Rise of NFTs have not gone unnoticed. Coinbase has announced in early October that it was developing its own NFT marketplace, right? So this is something which is really huge, guys. For Coinbase to introduce an NFT marketplace, and Coinbase already has a crypto logistic, right? It already has users who have e-wallets, and all Coinbase needs is their own NFT market, right? So since its IPO, the stock is still down 28%, nearly 34% since the Q3 earnings. But every dip, again, if you see from a long-term perspective, could be a decent buying opportunities. Cryptocurrencies at this point of time are really, really volatile. So yes, if we see the financial results of Coinbase, it can vary from quarter to quarter. That being said, again, as I am telling you that these are the picks of 2022, you look at from the whole year perspective and not from quarter to quarter. So just keep a check on this. Just continue to read about these more and try to define your risk as well when it comes to these kind of companies. Then there is Adobe. Adobe, so it's a software as a service company, right? And again, Creative Cloud. I barely use Photoshops and other platforms, but I still am a member of Creative Cloud and continue to use Adobe products rather than installing in my system. I just use it through the cloud service, and it's really easy. It saves a lot of storage, increases the efficiency of your system. All right. And during the pandemic, through Adobe, a lot of us used these digital document signing processes. And Adobe is helping a lot of companies to transition from paper based processes to digital. The cloud service also is something which is really good. They're using AI to allow its clients to operate more and more efficiently. Now, when it comes to creativity, we all know there are Adobe softwares, right? Uh, but there are a lot of sectors where Adobe has put their foot in. You talk about marketing automation, you talk about digital commerce solutions. These are the areas where Adobe is again increasing. Uh, in 2023, the company is expected to be in a very strong position. And that is the reason that why Adobe is in this portfolio. You can do a lot more research here. So out of 32 analysts, 25 of the Bloomberg analysts recommend buy, and 7 of them recommends a hold to it. But do look at Adobe as well. Now, again, looking at semiconductors, as we have already discussed, one company for semiconductors. So ASML Holdings, again, you can look. It's they create lithography systems from the semiconductors area. Um, you can look at these companies. I don't want to mix two companies together for semiconductors. Let's look into the financials also, which was one of the most important themes given the rate hike is happening. So JP Morgan, even through the pandemic, uh, JP Morgan, the value of the stock continued to go higher. One of the industry's top performers, largest bank in US. Even during the pandemic, the company's stock surpassed all its rivals, where the price of some other institutions fell by double digits. FOMC will happen tomorrow. Fed's decision is really important, that whether they are going to taper, when will be the first rate hike, and how much it's going to be. So with all these happening, again, let's look at how JP Morgan is earning revenue. So there is commercial banking, there is corporate and investment banking, there is consumer and community banking, then there is wealth management. Consumer banking sector accounts for largest share of the bank's revenue. After comes the investment banking. Third quarter results have gone really good, uh, even after the reserves which banks have kept. One of the largest banks, $3.2 trillion in assets at the end of third quarter. Their dividend payments have also increased. Now, for those investors who are looking for a company to invest which gives good dividends, JP Morgan can be one of those. The payout ratio is currently 2.5, which is good and healthy. Great balance sheet at this moment. So, from this particular perspective, if you're looking a financial stock to look into, JP Morgan can be one of those choices which you can see. And as I said, again, talk to your risk consultant, talk to your risk managers, read more about it, and then only invest into either of these. Walt Disney, another reopening stock. Um, so Walt Disney in 2020, 2021, it was not really great because the recovery was just happening. It started in 2022, and later on we saw. So basically, after the lockdowns were relaxed, vaccinations came in, then the theme parks were open. A lot of movies came out. Spider-Man: No Way Home um, did really good at the box office. But again, Disney is one of those stocks which is still recovering. It has not fully recovered it. So I would say when it comes to theme parks, Disney's making money through theme parks, through resorts, through cruise ships. The consumer spending power in US is expected to increase. Disney's growth is still halted, but at the same time, we see the video streaming industry, it has become more and more competitive. They have gained new subscribers. I don't know how many of you know about Disney Plus, but that is a new video stream which has started, right? So just keep a check, as I said, again, on these kind of companies. Reopening stocks like Disney, we talk about Airbnb, we can also talk about Boeing. I think Boeing is the last one after this. Yeah. So Boeing also, we saw Boeing was so dramatic, right? 52-week low 185, 52-week high 278 during the lockdown. Boeing going down almost to 98 and then $90. But now, management of Boeing very much determined to come out of the current situation, revamp its engineering culture. Boeing was also suffering through the 737 MAX crashes, right? But now again, it has started regaining that worthiness from the Civil Aviation Administration of China, which is a very big step. Their 787 deliveries have resumed. China has approved the commercial services. Now, again, that being said, uh, what is going on right now? Boeing still dominating the Airbus. So once in a while, we have to understand this that either it's Airbus or it's Boeing, and at this time, Boeing is still dominating the Airbus, and it's revamping. So 2022 could probably be the year, but as I say, that the current numbers, what this portfolio is prepared according to that. Understand your risk first before you invest. There should be a mix of these companies. There should be a mix of the stocks, not all tech, not all financials, not all dividend. There should be a mix of all this and continue to look from the news perspective as well. Right. So just 1 second. Let's look at. So these were the few investment themes, and looking from the 10 factors which you as an investor should definitely eye for 2022. Inflation is really important because higher inflation has led central bank to talk about interest rates the way they are, right? They are increasing the interest rates, and because of the high inflation. So inflation, you need to keep a strong watch. If it continues to increase, then rate hikes probably might be higher, more than faster than expected. But if it comes under control, then Fed might change its language. You never know. Federal Reserve policy, weak bond returns, retail investors, and retail investor, you closely have to check for the volatility. Guys, understand this market is very volatile at the moment. Anybody giving you a prediction about anything, it can turn like this tomorrow. So that's why I keep telling you that whatever you do it with a pinch of salt. Understand that this can be different also. Uh, so before we end, I want to show you something. This is something really, really nice, and I was looking at this and I was thinking about it. So this is S&P 500, the one of the major global benchmark US index. So a lot of investors think that the rate hike will kill the bull market. Rising bond yields are bearish for S&P 500. After 25% rally in 2021, there will be a negative return in 2022. These are the very common, I don't want to say myth, but then this is a very common thought that the rate hike will kill the bull market, right? Let's try to understand. Many market participants are worried about Federal Reserve hiking interest rates for the first time in March. History suggests stocks could see more volatility after rate hikes, especially during the first 3 months. But this could be a function of the economy aging by the time hikes happen. An aging economy, bull market tend to see more significant moves. So in the past 7 cycles, saw a correction in 4 of them during the next 3 months with an average of 4.2. So just look at this. What do you see on your table right now? Let me zoom into this. So look at the performance of S&P 500 after the first rate hike. So the first rate hike, which happened 1st April 1987. So the returns in the next three, before I address it, there's a question. When we buy stocks under CFDs, do we get dividend? Yes. When you buy CFDs, you do get dividend in the form of corporate action. You receive it in your account. But if you short sell CFDs, then that money will be taken away from your account also. So that's how you receive dividend in CFDs. So coming back to the performance of S&P during the first rate hike. So if you see returns in the next 3 months after the first rate hike, 1st April 1987, you will see mostly from 87 to 2015, whenever the first rate hike has happened, it's mixed in the first 3 months. And if you see in the next 6 months, again, most of the time it has shown positive, barring one. But if you see returns in the next 12 months, S&P has shown positive returns after every first rate hike. So if you see the date of first rate hike from 87, 88, 94, 97, 99, 2004, 2015, and now it's going to be March 2021. So mostly in the next 12 months after the first rate hike, S&P has shown positive returns. This is again, these are the data and numbers, guys. This is something which is really interesting to read about. So looking at the past history, it helps us to understand, that how the trend of S&P 500 has been. And look at the performance during when the 10-year bonds yields go up right here. Look at the performance of S&P 500 during that time. So most of the time, it has shown positive returns even after the 10-year yields have started going higher, except in 1971, 1983, and 1993. Rest every time, the percentage returns have been phenomenal if you see right here. And then 25 returns for S&P 500 are this. So look at S&P 500 return year over year. In 54, it gave 45% return. Next year, 26%. 55, it gave 26%. Next year, it was 2.6 positive. Only in 1980 and then 1989, sorry, 1991 were these 2 years where subsequent returns for S&P 500 were negative. But if you see 2019, for example, positive returns, and then 2020 positive returns, 2021 26.9, and then 2022 again. In the past, every time S&P has generated above 25% return, the next year 85% of times the average return has been 11%. So this is some statistics which is from S&P 500. uh, there is a lot of research put behind these things, so this is something which you can definitely look at, guys. Again, it's like an investment insight. Read more about it and you will realize that if this is how the historic prices have moved, then is it something which can happen again? So just do more and more um, uh, contemplation before you reach to a decision. Do more and more analysis, talk to your risk consultants, talk to your risk experts before you reach to any point. Last but not the least, please understand one thing about cryptocurrencies. The crypto outlook is um, right now the Bitcoin has come down. I see as my ticker goes round, it has come down to 34, 35,000, and it's 50% down from its high. If you see, Ethereum is almost more than 50% down from its highest. Focus on cryptocurrencies which have a purpose and which are capable of solving a problem of a higher magnitude. Bitcoin was aimed to solve cross border payments. Cardano is responsible for lifting up the education system of Ethiopia. Ethereum provides a platform uh, for NFTs, for Web 3.0s, for a lot of such new products. So continue to stick to the major cryptocurrencies. Refrain from being carried away in Doge coins and shit coins and meme coins and Squid Games and Shibas, because those kind of coins mostly present a lot of pump and dump schemes, right? Like the creators of these coins, they create this hype and start pumping money, and when investors start entering into those coins are dumped. So there's a lot of pump and dump scheme which is going on. Be very careful about that. There are a lot of futuristic themes also. For that, do attend the webinar on thematic investing, where we talk about investments in AI, robotics, cyber securities, water related funds, agriculture related funds, and also investments in renewable energy and EV space. We do an entire session on it. All right. So there is some question about the demo accounts. How do we get the demo accounts? Demo accounts can be taken by the relationship manager itself. You just call the guy who connected you to the webinar, or the girl, and they can provide you the demo accounts. Are you available for a one-on-one session also? Yeah, I'm available for a one-on-one session. If you want to learn more about the platform, learn about the strategies, I'm available, and we can definitely do that. So, before we end this session, a big vote of thanks on behalf of my family and my friends, and mostly me and my company, to those people who are connected to healthcare industry, doctors, first responders, midwives, nurses. If you are one of them, if you have friends or families who are doing these professions, a big vote of thanks. What you have done in the pandemic and what you're doing right now, it's very commendable. You have been risking your life in and out, and we could not feel uh, more. We really appreciate this effort, and thank you so much. I wish a great health to all of you, If you want to do one more session, one-on-one with us, we are definitely available to you through Zoom. If you want to come to the office, we are working now. Fridays are working, markets are open. So anytime you want a session with your portfolios, we'll be definitely very happy to do that for you. If you like this session, please go on Google reviews, type Century Financial, and do give us a feedback of whether you like the session or you want to improve something on, and we can definitely do that for you. My name is Yogesh. Once again, thank you so much for joining this session. And if you have any questions later on you want to ask me, you can reach me out or you can reach your relationship manager and we'll definitely have sessions. Once again, have a great night.